Hey everyone, welcome back to Corporate Decoder. In this video, we will dissect Lord Abbett Global Fund Inc.'s latest shareholder report. And boy, do we have some interesting details about their Emerging Markets Bond Fund and Emerging Markets Corporate Debt Fund for the period ending June 2025. Before we dive in, if you love getting the real scoop on company filings, make sure you're subscribed to Corporate Decoder. And for more in-depth discussions and to connect with fellow finance enthusiasts, join our Discord community linked in the description below. So we're looking at a report from Lord Abbett Global Fund Inc. for the first half of 2025. This document is essentially a checkup on two of their funds, money market funds, the Emerging Markets Bond Fund and the Emerging Markets Corporate Debt Fund. Think of it like a detailed report card showing how these investments performed and what they were up to. Let's start with the costs involved for your average investor. For the Class A shares of the Emerging Markets Bond Fund, a hypothetical $1 L Neon Zeri talks you about Sing 5-C shares that same Pike C 81 or 1.60%. These costs are annualized, meaning once a year. It's important for investors to know these fees because they directly impact how much of your investment actually grows. Higher fees can eat into your returns over the long run. Now, let's peek at the overall health of the Emerging Markets Bond Fund as of June 30, 2025. The total net assets for this fund were a solid, Dixai Fund 1 a solid DISID 11,555. That tells us a lot of money is invested in it. It holds 29 different investments, meaning it's quite diversified. The portfolio turnover rate was 31%, which suggests they weren't buying and selling things at lightning speed, but rather making considered trades. Looking at how the money is actually invested in the Emerging Markets Bond Fund, it's overwhelmingly in foreign government obligations, making up 0.7% of the portfolio. Corporate bonds make up another significant chunk at 28.59%. Convertible bonds are a tiny sliver at just 0.04%. This tells us the fund is heavily focused on debt from different countries. For the Emerging Markets Corporate Debt Fund, the total net assets were Kia Wine 324,916. It holds 182 investments and had a portfolio turnover rate of 34%. This fund has a much heavier concentration in corporate bonds at 90.75%. Foreign government obligations are a smaller part here at 5.82%. This distinction between the two funds is critical. One is primarily government debt from emerging markets, the other corporate debt from those same regions. Now, for the really interesting part, what exactly are they invested in? Looking at the Emerging Markets Bond Fund, we see a lot of foreign government bonds. For instance, there's a sizable chunk in Mexico with holdings in various types of bonds. We're talking about bonds from Comisión Federal de Electricidad, Petróleos Mexicanos, and others. They also have significant investments in countries like Argentina, Brazil, and Colombia. These are all countries in developing economies. Within Argentina, they hold a significant amount of bonds, specifically Argentina government international bonds. The fact that a good portion of these are labelled as E in the notes, meaning step bond security with a predetermined schedule of interest rate changes, suggests these bonds have different interest rates over time. This can be a way to manage risk or capture yield. They also have a defaulted security from Venezuela, Petróleos de Venezuela SA, which is flagged as non-income producing, meaning it's not currently paying out. That's a direct hit to potential returns. Brazil also features prominently with investments in Brazil government international bonds and Brazil. Let's do Tesouro Nacional, which are essentially treasury bonds from Brazil. The treasury bonds are listed as zero coupon, meaning they don't pay regular interest but are sold at a discount and then redeemable at face value at maturity. The total corporate bond section shows a total fair value of DES 33 164,627. This section is where you see the debt issued by companies in emerging markets, not governments. Some of these have footnotes indicating they are Rule 144A securities, which means they are restricted and can only be resold to qualified institutional buyers. This can sometimes mean less liquidity. Looking at the short-term investments for the Emerging Markets Bond Fund, we see repurchase agreements and money market funds. Repurchase agreements are essentially short-term loans where securities are used as collateral. Money market funds are generally considered very safe, short-term investments. These make up a small but important part of the fund, likely for liquidity. Now, let's touch on derivatives for the bond fund. They have forward foreign currency contracts, basically bets on currency movements. They're buying and selling euros, for example, trying to manage currency risk or potentially profit from currency fluctuations. They're also involved in futures contracts, which are agreements to buy or sell a commodity or financial instrument at a future date at an agreed upon price. These include euro bundles and US Treasury notes. Switching gears to the overall financial health as of June 30, 2025. For the Emerging Markets Bond Fund, total assets were over decisive 1220 million, while liabilities were around 1027 million. For the Corporate Debt Fund, total 45 million, leading to net assets of about Bexi or when 7 million. For the Corporate Debt Fund, total assets were close to Edge 37.8 million, liabilities around NT 27 million. For the Corporate Debt Fund, total assets were close to Tech 37.8 million, liabilities around unti 2 million, and net assets just over 35.8 million, leading to net assets just over 35.8 million. Let's talk about the per share value, which is what an investor directly sees. For the Class A shares of the Emerging Markets Bond Fund, the net asset value per share was PIX 42.29. For the Corporate Debt Fund's Class A shares, it was CAX 13.942. The difference in price reflects the different investment strategies and cost structures of each fund. Looking at income for the 6 months ending June 2025, the Emerging Markets Bond Fund generated over 37 million in investment income, primarily from interest. The Corporate Debt Fund brought in over 1 million, also mainly from interest. Now let's talk about gains and losses. The Emerging Markets Bond Fund had a realized loss on investments of over 15 million. However, they saw an unrealized appreciation on investments of over G4,000. These unrealized gains are important because they show potential future profits if the market moves favorably. When we look at the changes in net assets, the Emerging Markets Bond Fund saw a net increase of almost 4.9 million for the 6 months. However, if we look at the full year ending December 2024, there was a decrease of over 4 million. This shows the volatility in the markets impacted the fund significantly in the previous year. The emerging markets impacted the fund significantly in the previous year. The Emerging Markets Corporate Debt Fund had a net increase of about to 1.9 million for the first half of 2025, and a much more substantial increase of a decrease of over 1 million for the full year of 2024. It's also worth noting that the Emerging Markets Bond Fund has a substantial net capital loss carry forward of nearly just 100 and fix is important for tax purposes as it can be used to offset future taxable capital gains in 14.1 million. Regarding the fees, Lord Abbett charges management fees. For the Emerging Markets Bond Fund, the net effective management fee after waivers was 0.50%. For the Emerging Markets Corporate Debt Fund, it was much lower at 0.12%. This difference might reflect the different strategies and risk profiles of the funds. There's also a 12B1 distribution plan, which is essentially a marketing and distribution fee. For Class A shares of the Corporate Debt Fund, it's 0.5% distribution and 0.5% distribution and B fees because they directly impact their returns. At zero, it's at a higher ongoing fee reflecting their structure. It's crucial for investors to understand these fees because they directly impact their returns. One of the key points in the approval of the investment advisory contract was the nature and quality of other services. The board considered really closely the compliance, administrative, and other support services that Lord Abbett provides. This shows that it's not just about picking investments, but also about the operational backbone that keeps the fund running smoothly and legally. For the Emerging Markets Bond Fund, the portfolio turnover rate was 31%. For the Corporate Debt Fund, it was 34%. These numbers mean they weren't aggressively trading securities. A lower turnover rate generally means fewer trading costs and potentially fewer short-term capital gains distributions, which can be advantageous for long-term investors. Now, looking at these filings more broadly, Lord Abbett's funds are navigating the complex world of emerging markets debt. The bond fund is heavily weighted towards government debt, indicating a focus on sovereign risk, while the corporate debt fund leans into company debt, which can offer higher yields but also carries more specific company level risks. The significant unrealized gains in both funds hint at some positive performance potential in their holdings, but the realized losses and large capital loss carry forwards show the inherent volatility and risks in these markets. The fact that the board spent so much time reviewing the management contract, even noting performance below peer medians in some cases, signals a commitment to oversight, but also highlights the challenges in managing these specific asset classes. The fee structures, while varying by share class, are standard for the industry. One notable risk remains the heavy concentration in corporate bonds. In some emerging markets where political instability and economic downturns can have a pronounced impact, overall these funds are. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description too for even more discussions on corporate finance. Thanks for watching. See you next time.